Good afternoon, everyone. First of all, on behalf of the Hong Kong Green Finance Association, let me express my warmest welcome to all of you for joining this AFF session on sustainable finance and net zero. Let me also thank our distinguished speakers, Joseph, Grace, Madam Lu Ying, and Jim, for supporting our event and our work at Hong Kong GFA for the past many years. Our topic today is sustainable finance and net zero emissions. As you know, both mainland China and Hong Kong SAR have recently announced that they will achieve carbon neutrality by 2060 and by 2050, respectively. And in the region, Japan and Korea have also announced similar targets. I also heard that Pakistan announced that they would no longer invest in coal-fired power generation, which is one step closer to carbon neutrality. These are all very encouraging signs for green and sustainable finance. I strongly believe that the carbon neutrality would boost demand for and supply of green finance greatly. In China, a lot of discussions and research reports were out in the past few months on how green finance should support carbon neutrality. I myself will have a long article, which is more than 10,000 words, to be published in a few days in the PBOC newspaper called 金融时报. That's not the Financial Times of the UK. It's a Chinese version of the 金融时报. Let me just highlight a few points I made in this article. First of all, the carbon neutrality targets would provide a lot of opportunities for the financial sector. Mr. Xie Zhenghua, who used to be the chief climate negotiator for China, led a team recently, and they estimate that China would need to have 138 trillion RMB invested in low carbon projects in the coming 3 decades in order to achieve carbon neutrality. And I myself led a team for Chongqing to design a carbon neutrality roadmap, and we estimated that 13 trillion RMB will be needed for green finance in the coming 3 decades, and of which 8 trillion will be low carbon investments. Note that Chongqing is only 2.5% of China's GDP. So scaling up that to China, I think the country as a whole will need at least 100 trillion and maybe a few hundred trillion RMB to be invested in low carbon projects in the coming few decades. On the sector level, energy, building, transportation, and industries will see most of the opportunities for green investments. In the energy sector, experts are already saying that in the next 5 years, newly installed capacity for solar and wind would reach 100 gigawatt per year, which is doubling from the past 5 years. And in the transportation sector, I think electrification will be the trend, and the electric car sales will probably reach 35% per year in the coming 5 to 10 years. And in the building sector, not only green building will be popular, many regions will begin to construct what they call zero carbon buildings, and the retrofitting will be needed for all existing buildings going forward. And in the manufacturing sector, green and low carbon technologies for energy efficiency and adoption of low carbon materials will be very important part of the carbon neutrality game. Of course, the carbon neutrality targets will pose challenge to the financial sector as well. Especially, we need to watch the financial risks arising from climate transition. For example, my research team has developed a model which is called a climate transition model that shows that the non-performing loan ratio of loans to coal-fired power generation sector will rise from the current 3% to about 20% by 2030. This is because the demand for coal-fired power generation will shrink, their pricing power will decline, carbon price will increase, and funding cost for these companies will increase. So the type of risks coming out of the climate transition will be visible for many of the high carbon sector, including coal-fired power generation, steel, cement, aluminum, chemicals, and so on. And therefore, banks and other financial institutions will have to conduct environmental risk analysis in order to manage these risks. In terms of what we should do to improve the financial system to make it more aligned to carbon neutrality, I would make the following recommendations. Number one, improve our green finance standards by removing high carbon projects from green finance catalog, even though some of these projects can help achieve other environmental objectives. This is what we call no significant harm principle. And secondly, we need to improve disclosure standards, especially corporates and financial institutions will have to disclose carbon footprint, not only on their own operation, but also for their loans and investments. And thirdly, we need to introduce more incentives for green and low carbon investments. My recommendation for the PBOC is that it should consider reducing risk weights for green assets and raising risk weights for brown assets, which include high carbon assets. And before deploying such policies nationwide, some pilot projects can be organized. And number 4, we need to be more innovative in the financial sector on product innovation, which means that a lot more green finance products need to be linked to carbon footprint so that these products can encourage low carbon activities by reducing their financing costs. These recommendations were made for China in my article, but also I think they're hugely relevant to Hong Kong and many other green finance markets, and also for international collaboration. Now, before closing, let me say a few words on Hong Kong GFA. After our annual meeting last year held in November, Hong Kong GFA decided to revamp our working groups in order to mobilize more resources for the relevant sectors. Under the new structure, we now have 8 working groups covering the following areas: green and sustainable banking, green bonds, ESG integration, green insurance, green building, green PE, policy research, and external collaboration. Each working group is co-chaired by 2 members of our association. Green building and green PEs are the 2 new working groups, and we welcome all members of the GFA to join at least one working group and make your contribution to green finance development in Hong Kong. Let me also mention that the Greater Bay Area Green Finance Alliance, which was jointly launched by Hong Kong Green Finance Association, Guangdong and Shenzhen Green Finance Committee, as well as Macau Banking Association last year. The first annual meeting of the Alliance was held in Guangzhou in September last year, and the second annual meeting will be held in Shenzhen later this year. This Alliance has organized already 5 projects with positive externalities throughout the region. And these projects include green supply chain finance, solid waste, Greater Bay Area carbon market, green building, and blockchain application for green asset trading. As part of our carbon market study, we have recommended to establish a unified Greater Bay Area carbon market, of which Hong Kong should play an important role, including by creating a special channel called Carbon Connect to allow international investors to access China's domestic carbon market. Let me conclude by thanking all of you once again for joining our event today and supporting the Hong Kong GFA and Hong Kong's green finance market development. We look forward to more active participation from you in our GFA working groups and in projects sponsored by the GBA Green Finance Alliance. Thank you.